Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, April 6th. Hopefully, wherever you are, it's nice and sunny. It's going to be 71 here in Salt Lake City. We've been mowing for about 2 or 3 weeks, so hopefully that nice weather is coming your way. We got Rachel Dashiell with us in the chat. We welcome her. Everyone say hello to Rachel. Speaking of Rachel, you could actually just go right to her X page. She posts frequently on X. There's her handle right at the bottom of my page at Rachel-CS. Also, we had Jax yesterday meet the Easter Bunny. He didn't know what to think. On a funnier note, the grandkids came over, and the 2-year-old granddaughter, Capri's her name, and she was emotionally spent and threw her Easter basket right on the front doorstep. So it was pretty funny. Anyway, hopefully you had a good time, good Easter, and we're right back at it. Now, remember, you could also, this is a live session. You could also check us out on recording and also see our other archives right on YouTube. You actually go right to on YouTube. You can just go to the channel, Trader Talk Schwab Coaching Webcast. Subscribe if you have not subscribed already. And that way you can see all of our content. You can just search right there. Also, just real quick as we get started, Trading with Technical Indicators, want to talk about some reversals here today that we're actually seeing in the market. Kind of talk about how that's playing out in the sample portfolio. Remember, in the current market, there have been examples of bearish trades and bullish trades. Our portfolio, the ones that we do for class, they are mainly bullish portfolios. Sometimes we do use bearish trades, okay? But they are primarily kind of more bullish portfolios. And that's trying to reflect what most people are doing, okay? In reality, probably, that they're not short the market. So I've tried to actually kind of get an idea of how can someone be bullish, but at the same time maybe practice some bearish trades. I think that might be a stepping stone of their learning, and that's why we try to do that. Now, just real quick as we get started, remember when we talk about the information, it's done for general informational purposes only. Options carry a high level risk, not suitable for all investors. When we also talk about examples, we will do those in the Paid Money software application for educational purposes only. Remember that investing involves risk, including loss of principal. Now, when we also talk about our examples, we'll talk about some of the principles of technical analysis. We talk about also the principles of building sample portfolios. Emotion tends to be the opposite of maybe what the investor might really be wanting to think in the moment. We try to be focused on proven principles and practices. We'll talk about some indicators here today in terms of momentum, and we'll also look at the examples right on the chart. Now, I want to kind of start with just real quick the ES first. Now, the ES, we're just taking a look at, this is looking at the overnight price. So this opens up, what, Sunday at 5 Central. And if you look at the ES, you're going to notice that it opened up lower, okay? And it actually over the night or over since we opened yesterday, went down to the upward trending 10-period moving average. And if we look at where we are right now, you're actually seeing that we're closing. If we close here, we're closing higher than where we opened yesterday at 5 p.m. Central. Now, if you look at the cash index, the SPX, what you're now going to notice is the price gapped up a little bit. I mean, just a smidge. The high of the day or the session was 66.19, and we're down to 65.94. So we're down about 19, 20 points off the high. We're talking about 0.3% off the high. Still actually seeing that we're not retesting the midsection of Friday's candle. I mean, is that a bad thing? I don't think if it comes back, that's a bad thing. It might be even a sign of momentum, okay? If we look at today and said, are we coming back down testing the 10-period moving average? I haven't touched that either, okay? So trying to hold a little bit of the momentum from Friday. Now, remember, if you look at the crossover, it's the first time we've actually crossed over since like before the Vietnam War. I mean, maybe it wasn't that long ago, but that's maybe how it felt. If you look at the crossover down here, now remember what I said last week. When the market goes down, we believe it 100%. When the market goes up, we don't even believe 25% of it because we remember the recent price action, and all of a sudden technicals become blurred because now it's based upon my feelings. Okay? Right? Remember that. When it goes down, I believe it. I'm reading the technicals, it's down. When it goes up, I discount it. okay? Because now we have all these things in our mind. We've got resistance above us, things like that. The thing is, on the way down, it's lower highs, it's potential levels of resistance. We don't know that yet, okay? Now, we actually also come back to, let's say, the Russell. You're going to kind of look at this. Now, by the way, if you like mid caps too, feel free to take a look at those. I won't include those in our session here today, but feel free to look. Kind of have like really a couple tops, right? 1 touch, 2 touch, 3 touch, and we're trying to come off that bottom. Now, we spent about, 2 weeks ago talking about the MACD. And if we talk about the MACD, one thing we kept mentioning over and over again is how when you get the price to go lower there, price to go lower there, we talked about the MACD not being down as far. Do you remember that those comments we made? Now you got a low, turn, right? Shallower. Now I'm circling the bright red, okay? Bright red on the MACD just means that we're lower than the previous day and the histogram bar is still below zero. Burgundy on that is really showing in this case that it's still below the zero, but it's higher than yesterday. What is higher? The histogram bar, okay? Now, if you look at this, what we've only had one down day, and we've been really, for the most part, staying above the zero line. Is that bullish or bearish? James, I know what the answer is, but I don't want to say it. Again, it kind of goes back to, are we going to be a technician or is it going to be emotion-tician? Okay? My emotions are telling me bearish. The chart actually might be kind of showing me something bullish, but I don't want to believe it. Right? I mean, this is what happens. Okay? Now, how did I learn about reversals? I'll tell you how I learned about reversals is historically I would get into bearish trades late because I didn't believe it was going down. I would sell at the bottom of those bullish positions. I would enter bearish positions when we were near or at the bottom, but I was just so fearful, okay, full of emotion. Then the market would reverse to the upside, and I would say to myself things like, man, I lost on the downside move, the bullish trade, and then I entered a bearish trade late, to say the least, and I can't get out of that one because now I'm going to be hit twice. Am I relating with anyone here? Hello? Hello? Okay. Now, how did I learn about bullish reversals? Well, the funny thing is if you've ever been bearish, whether it's stock or options, you kind of learn when is maybe the time to consider exiting. If there are bears left, if we break that 25.37 or so, that's where those bearish traders, they might say mama or uncle. Now, also keep in mind that when you look at the NASDAQ itself, that is not broken back up inside that channel, but we got to say the same thing as we said on the SPX. We haven't come back to Friday's midsection. Is that a bad thing? We haven't come down to the 10-period moving average. Is that a bad thing? It's kind of holding up. Now, we would say in truth, yes, we have fade off the high, but it's not really that big. Now, remember, the VIX right here also staying below the 10-period moving average. Now, remember, which way do you want this to go? Everyone out loud say down. Now, the one thing that we want to continue to watch, because it could be a theme, is the relationship between the crude oil price and also the energy sector. We did notice something that was fishy. And when you take a look at this, we saw that crude oil overnight touched, it was yesterday afternoon, touched 115. But what we want to reflect upon is when we've seen oil prices historically go up, the energy sector would be going up. Well, let's take a look at this. Now, I misspoke a little bit before I said Friday's candle. I really meant to say Thursday. Forgive me, it was Good Friday. Now, the one thing you'll kind of notice is when we did see crude oil go up to 115, we barely saw the energy sector move at all. This is the second day in a row where you would think historically, I mean, if that had happened, the energy sector, when you saw oil go to the upside, the energy sector was moving up with it. This might be a sign of those traders saying, look, this situation abroad might kind of be fully priced in or near priced in. And some of those traders might be saying, look, I want to try to profit take. Now, we'll keep an eye on kind of the discretionary sector, the energy sector, airlines, hotels, cruise lines, and so on. But that's probably going to be the theme of this week is can oil prices push down? We've waited 2 weeks now. And second, we're starting to kind of see some cracks in the energy sector and the stocks, okay? And can we start to get those airlines to actually reverse back to the upside? So option number one is maybe be bearish oil in general or the sector. The second option might be, could I just go maybe long airlines? That's the idea we talked about. We'll come back around in just a second, okay? Now, super quick on this front, when we look at the stocks, I mean, bullish or bearish? What's your take on this? Bullish or bearish? I mean, I'm not sure if we'd say bearish, okay? Kind of looked like it actually had a break of support. I posted about this on Thursday. Well, when we break support only to see it snap back up, that tends to be a bullish signal. Tends to be. Here we are. If that bearish trend is going to hold, we need to stay below the Berlin Wall of resistance of 7,900. And today, trying to poke through there. Some of those stocks like Seagate Technology, Seagate, hit a brand new high here today. WDC, not that far behind with a crossover, okay? Don't tell me crossover. I just want to believe what I believe, okay? It's funny how even when we know we're wrong, we don't even admit it. That's the funny thing about people. Don't even admit it, okay? Okay, and SanDisk, both getting 2 out of 3 getting a crossover there. Well, the last 2 crossover, the Seagate that already crossed over. So some of these kind of old trades kind of coming back in. And if we actually bring up kind of more your true, let's say Micron, let's start here for just a second, shall we? If I were to ask you a question like, where do you see resistance? Where do you see resistance? What would you say? Now, I'm going to kind of tell you something. The higher that the VIX goes, right? The less people that tend to be paying attention, okay? Usually when the VIX is the highest, that tends to be at a peak state of potential opportunity. Now, that can be a whole fundamental discussion as well, not just technicals, but fundamentals. Now, when you also take a look at this, it's not where the VIX is currently, it's where the VIX has gone. Now, we know the VIX was over 30 last week, right? And when the VIX was over 30, we did actually see that Micron did fall. Parallel to what the volatility did, also the NASDAQ, semiconductors. But also, could we, now, we believed it when it was going down. The question is, if the VIX does come down, could we start to see the opposite effect of Micron? Okay? Now, if we were to ask ourselves the question like, where do we see the resistance? It's kind of, if we looked at the double bottoms that we actually have, 1 touch and then 2 touch. Now, let me ask you a quick question. Bullish or bearish? Bullish or bearish? Now, the moving average crossover, you could say, yeah, it's trying to cross over, but you still got to ask yourself, what is the upside, old support, new potential resistance? Now, what we're going to do is we're going to put on a couple trades here, but we also do need to manage a couple positions. Now, what I'm going to do is, in this case, is I'm going to kind of take this. Let's start with the stock position first, okay? Let's say the investor said, look, James, I've had some more cash lately. And what I want to try to do is use some of that cash to enter into new positions. We've gone over it quite a few times. Dollar cost averaging. I'll even take that here today. We hit that pretty hard last week, middle of the week. I'm going to imagine here that in this case, let me zoom in. And that 370 or so, right, that area, that's the support line. Now, could we actually set our stop below there? Yeah, you could, but it's never really tested there, okay? We're hoping that it's actually going to be that level. Now, what I'm going to do in this case is I want to go back to something. Now, by the way, when you look at the net lick, the highest the account got when the market was at the high was probably 156. We've just kind of chipped our way back up. We're going to look and see if we can't continue that, okay? I'm going to bring the Micron back up. Let me slide this down, okay? About right where we were before, right about right there, 370. And I'm going to right-click on the chart. Going to go to right down to Buy Custom. I'm going to go to where it says Webcast Buy OCOGTC. We did that Thursday. Okay, there it is. Now, I'm going to put this target right here. Now, that target, if we kind of said where might be a higher probable area to go to? Well, if we didn't take the very top, probably right around 440-ish, okay? A target doesn't mean it's going to go there. You're just saying if it does go there, I wouldn't mind to sell and to take some profits. But we don't know if it's going to go there. You can look at also what's called probability of touching on the trade tab and then see statistically and within a time frame, what's the likelihood of it going to there, to just touch, okay? We're going to put, in this case, 440. Now, underneath, what I'm going to do is I'm going to set that stop underneath the moving average, the 10 period, okay? Now, here's the difference, okay? I historically, I would set tight stops. I found from experience that tight stops, in theory, they're great. They're tight stops. The problem, they're tight stops. In more volatile markets, all you did is just prove that they're tight stops, okay? Over time, the investor might be more open to, from experience, I don't want to set tight stops. I'd rather have a lesser chance of being stopped out than a higher chance. Worst thing about being stopped out is you lock in the loss, okay? Now, I'm going to take that 350.97, okay? And what you're now going to see is I'm going to set it less 2%. Now, what I saw is when you would set stops, usually within a 4-day period, a high percentage of the time, the price would bounce back up. 100% of the time? No, absolutely not. But a high percentage of the time, you get stopped out within 4 days, a lot of times, not all, the price would just go back up, okay? And so that could bring on a whole nother discussion. Now, that also kind of kind of states the point of why do we show examples of setting looser stops? From what we just talked about. 343.95. Now, I'm going to put that right there. Okay, 343.95. Got a target at 440. The capital size, if we said, hey, we're going to invest, let's say 37.50 in terms of capital, it's really going to be about 12 shares of stock. Is this an option trade or a stock trade? Well, if you don't see any expiration, you don't see any strike, it's not an option trade. This is a stock trade. Okay. Now, if we go back to this, we're going to put that right there, confirm and send. Now, remember how the stop works, okay? If the shares are purchased, and by the way, the price moved on us about $1 and change. So let's stop talking and start entering the position. That's what you're thinking, probably, right? Now, we'll have to move that. But the stop underneath is if it goes down to that price or less, it could get filled. It's not saying exactly it's going to go to that price, okay, and stop out. Could. But if it's volatile, gaps down, it could be filled at a lower price. Now, in this case, what I'm going to do is I'm going to put that, let's see if it actually fills. Okay, now, there's the order, right? And I got to fix that number right there. But now what you're going to see is got a target, and then you got to stop underneath. Okay, there it was. Now, if we take a look at this, okay, the other thing we can kind of talk about is adding the position or buy stop orders in the current market when the volatility is high and you're thinking that volatility might contract. Buy stop orders, buy stop limit orders. This is prime time to practice those in the Paper Money account. Now, I want to also go back. Let me kind of show you a couple things. Let me just kind of show you something that we need to touch upon just quickly. When you look at stocks example given like Devon, DVN, right there, you're now going to see that when we look at Devon, let's look at a management example. Okay, it's not always about buying. Okay, it's not always about fun, just buying stuff. It's about, wait, what about the current positions we got now? Now, if the reason why we care about this is because if we have positions that are, let's say, coming to the end of their life, they might be stopped out. I'd like to get the money back to try to put the money into something else, okay? Now, if we looked at this and said, okay, we got two oil positions, Devon and we got Halliburton. Now, does anybody know which one of these is more like, which one are we going to look at first? Does anybody know based upon what we have on this monitor page? Which one would you look at first? Well, I'll tell you exactly which one we look at first. We would look at the one that actually shows trend 5. The reason why the trend 5 is more severe is it's actually gotten down, the price has gotten down below the short-term moving average, namely the 10. Okay? The fact that this actually says 4, but earlier it was 5, intraday it can move. If we're 4, it means that the price is still up closer to resistance. Also meaning the price is above both moving averages, the 10 and 30. But if we have 5, I mean, we're falling down away from and below the moving average. So if we said like flashing lights, it's Halliburton. Now here's the deal. We're good about buying stuff, but when we come to selling stuff, we're like, well, yeah, I'm a collector. We're not a collector. We actually want to, for example, be disciplined in terms of entering and exiting. Now, option number 1 is an investor might say, James, I'm going to get in on trend 2, and I'm going to get out on trend 4. Well, trend 2 is a diagonal breakout. Trend 4 is you're selling at resistance. Okay, fine. Now, by the way, trend 2 is the price getting back above the short-term moving average. Think a diagonal breakout. If the trend goes up long enough, let's say you get trend 2, you get a diagonal breakout, and all of a sudden the stock falls down below the shorter-term moving average, maybe acting like support, the investor might say, I'm going to get out on trend 5. Okay? Now, is it always the case that you're going to get on trend 2? No. You might have been a day or two late, etc. You might have gotten in on trend 3. Okay? Trend 3 is this price above both moving averages, and you might try to sell at 4, where the price is at resistance. Or you could have gotten in trend 3, and then the prices started to falter, and you got out on trend 5. Okay? Now, someone always asks the question right here, where could I actually see kind of the definitions? On that trend column, when you actually go to that, if I bring this up just real quick, if you go to that trend column, just right on the script itself, okay, so right there, you're going to see that there, by the way, so what I did, how did I get that? Well, I'm going to show you 2 ways to do this, because if you don't have the layout the same, it's how I got here is different. But number 1 is if you had this, if you had your trades laid out based upon strategy, well, just go right to the little gear right there. Okay. Click on the script icon, and you're going to get this. Okay. And this really gives you what is really meant by number 1. Okay. What is meant by number 2, and so on. What does that mean? Okay. Now that's if you went through the monitor page. If you said, you know, James, I'm not coming through that angle. I'm just going, I only have that really on the Market Watch page. Does that also have it as well? It sure does. Okay. If you have trend on the Market Watch, just right click on it, customize. So right click on the heading, customize, and then just go right, same thing we did before. Click on that little sheet of paper, the trend script, okay, icon, and there it is. So no matter where you come from, whether it's the monitor or the Market Watch, we're getting to the same point, which is really a written out definitions of what do we mean by these certain numbers of trends 1 through 5. The reason why we created that is people get sick and tired of when you ask someone what is the trend, their answer to that question is based upon how they feel. How do you know that? Because I talk to a lot of people, and it's amazing how you, by the way, you can talk to the same person and they'll give you different answers based on certain days, based on how their portfolio is doing. That's very frustrating. Okay. So in the world of investing, you're trying to say, look, I don't want really how you feel. I want to actually get definitions or criteria. That way the emotions most likely are left out of the equation, or less likely to be in the equation. Does that make sense? Now, no one was more emotional than I was, okay? Now, if we take a look at this, I'm going to go back to this just real quick. So when we look at Devon, the question we got to ask ourselves is there showing a sell signal? Well, if we just said if the price actually got down below the short-term moving average, if someone wants to try to sell, number 1 is we could say, well, how long has the 20-period moving average been down? 1 day. Are we late or early? Well, if the red moving average has only been down for a day, we're right on time. How long's the 10-period moving average been down? 3 days. So are we late or early? We're a little later, but we're not that bad. Okay. Now, how do you know the stock has ran up and it might not just flag back and then bounce back to the upside? It might. Okay. But all we know right now is we're starting to get into that flag. And the goal of the traders that say, look, I want to try to get in and make some money. Now, wonder if it breaks back to the upside. Well, try to get back in. But in the meantime, we're saying if we actually have trades that are showing sell signals, we're trying to actually adhere to the sell signal criteria. Okay. Now, why is that also important? Because last week we ran into a situation where we didn't have any money. Okay. And now I'm going to look and see, can we get out of DBN? So DBN's first day that we really saw both moving averages red, it was on Wednesday. Thursday was right there. This is Monday, Friday market close. So what we're going to do is on DBN, we're going to right click on those 100 shares, okay, create closing order, and then sell. Now, we're not saying, now here's what you got to remember. Could it go back up? Yes, it could. But in the meantime, we're going to try to use that capital for something else, okay? We're going to try to use it for something else here. Now, what I'm going to do is if I have a stop on it, I need to also go back and just make sure that the stop is off. And that's Halliburton, okay? So what I want to really do on that Halliburton, if we have a stop on it, I need to cancel the stop. Now, number one, you could do it right on the trade page, or I think easier, just go right to where the stop is, click on the X. If you click on that X, it's going to cancel the stop. That might be a little easier. Now, if I go to now the trade page or monitor, whatever page we want, either or will work. We're going to move it to 37.89, confirm send. Notice there's no commission to sell it. Send the order. Okay, filled. Now, the one that we're going to keep an eye on, when you look at Devon, Devon is that one that's right up near resistance. What's the concern? Well, the concern is the moving averages has gone red. We don't want red moving averages. Boo. Okay? We want green moving averages. We want green moving averages. We want green moving averages. Okay? Now, when we go back and say, let me see what Devon looks like just real quick before we look at a new one, Devon looks like the same. Now, when you come back to this, the trend type is really based upon a 10-day exponential and a 30-day simple. Why is it showing trend 5? The price currently is trading below the 10-period exponential, okay, and the 30-day simple, above the 30-day simple. In other words, and you'll kind of see that there with what I just said, the price below. That's why you get the purple color candles, okay? Purple color candles, purple color candles. Purple color candles does not mean that it's going to come crashing down. It's just saying price is starting to lose momentum, okay? So think of orange ones as, hey, consolidation perhaps. Purple, losing momentum. Red, more severe selling. We're now picking up momentum where it's chewing into the trend. So on this one right here on Devon, I'm going to actually go in and with Devon as well, we're going to try to sell this up. Now, same thing what we did before. We're going to try to take that money and actually kind of with the idea, Devon is also, and the one thing to kind of bring out is, why does it move between trends? Because this script is intraday. It's not just at the end of the day, okay? So when you look at, let's say, we were in trend 4, but if that price, as we're talking about, is going down, 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 and getting below the 10-period moving average, can it also be in trend 5 as well? Yes. If we were talking about it, and the price goes down below the 30 as well, in front of our own eyes, script's not guaranteed for accuracy or timing, but it could be showing that. It could go to script 1 as we're talking about it, okay? Now, we're going to try to take that off the table and also free up some capital. Right-click, we're on the monitor page, create closing order, sell, okay? There it is, there. A lot of investors like to try to get the mid price. That's not a guarantee that we could actually get filled to that. We're going to send the order, okay? Now, if we go back, okay, send. Now, the one I just want to make mention of, we're going to go to a new position. I'm going to go back to just real quick. Now, here's the thing. We cannot assume I put my order in, it should have sold. Well, you want to check with your own eyes, okay? That's why they're there. And what I'm going to do is I'm just going to double check, did it fill? And number one is it showed it up at the top. But if I go to messages, we're also going to see it did sell, sold, filled, right? And we look at that position down there, we don't see the position, okay? So it's gone. We can also see in the monitor any filled orders. So what we did here today so far, we sold 2 of those energy positions, okay? Now, I want to go back to just real quick, are there any questions? Now, the comment was, what if nobody buys the sell? Well, easy answer. Prices continue to drop. Now, this is probably the, why does the market keep going up? There's more buyers than sellers. Why does the market keep going down? There's more sellers than buyers. And you would think that's the most neophyte, dumbest answer, but that's what it is, okay? Bulls dominating the price. Of course, with the price, you get buyers and sellers. But if those buyers are controlling the price and knocking it up higher, or the sellers on the downside, they're controlling the trend and the momentum, okay? And we don't forget that just basic thing. I think sometimes we overthink it. Now, if we go back to, let's say, just real quick, couple other things that might be standing out. Now, I don't know about you and where you live, but no matter how much stuff we as Americans have, we tend to always want a little bit, just a couple more things. Anybody have that problem? Okay. Now, last week in my household, an undisclosed number of packages came to my house for some odd reason. Okay. And the courier asked me, it feels like Christmas time at your house. And I was like, well, it's not funny. Okay. Someone has to pay for that. Now, the big actually thing is when you look at companies, I just want to kind of bring up a theme we're seeing a little bit here. Okay. When you look at, let's say, Amazon, notice that that's actually coming into the earnings in about 3 weeks. We said last week, a lot of times, those earnings can be something the investors or traders target. Now, speaking of target, so just notice a couple things. Amazon, trying to get a little reversal here. When you look at a stock like Walmart, we're going to see that downward trend line. Now, by the way, if you are someone that likes a flag, then you probably like diagonal resistance breaks because those are flags to some degree, okay? Walmart getting a push, Amazon's getting a push. Of course, Costco nearing a short-term high. What's so interesting about Costco, or maybe not, is that when the market fell down, Costco didn't really even fall down, okay? It kind of went a little bit more sideways. Did it go down some off the high? It did. But the biggest thing is it wouldn't take a whole lot for a little Costco to knock through that prior high, which is only $10 higher, less than 1% higher. Not going to do a trade on that, but I want to kind of show you what we're seeing with retail. When you look at Target, you're going to kind of see that classic V pattern. Now, I don't have a whole lot more to say on Target besides we're already in 2 examples. And if we go look at Target, I just need to double check something. When you look at Target, you got that position right there, which is a collar position there. We don't have anything to do on that, okay? If we go down and say, do we have anything else there? Oh, this looks like we might have something. How do we come to that conclusion? Well, the way we came to that conclusion is if you look at the option that was sold, okay? Now, in this case, what's kind of interesting is you got a long call, okay? What is a long call? Well, you got the right to buy the shares at the strike price, okay? The con about this is you only got 11 days remaining. Now, here's the deal. If you don't get the stock to go up, that option is decaying in value pretty much each day, assuming the volatility stays flat. Now, what side of the trade what side of the trade benefited? Well, you got two bullish option positions here. A long call, meaning you bought it, and you got a short put, meaning you sold it. What side of the trade benefited? Now, here's what's kind of not unusual. The side of the trade that sold positive time decay, that's the side of the trade that tends to benefit the most, unless the stock goes up and counterbalances the time decay. Now, do we need to do anything? Well, first thing what we're going to do is we're going to keep an eye on this. This needs to be sold this week because we don't want to go all the way to expiration on that. We know that time decay, burns faster and faster and faster as we get closer and closer to expiration. I'd say by Thursday, if we don't get a pop out of that, by Thursday, we're going to sell that because now we're inside the 4 to 10 days to expiration. Are you crystal clear? Now, if you just listen to what I said in terms of 4 to 10 days expiration, just off that thought, you would know why we're talking about selling that. Now, speaking of actually managing the position, we're going to take this position and what could we do here? What could we do? Well, we're going to sell the 410. We sold it at 410, and we're going to, now remember that number could, if we're talking about the price declines, it can only go down to 0. So it's define gain, define reward. So what I'm going to do here is we're going to right click on that and we're going to say, now if we close the order, we're really just saying, look, I want to get out. And I don't think, and also with that, I don't think it's going to go up any higher. Okay. Now, if we thought that stock was running out of time and we want to enter a new position, but farther out of time, and we thought the price might go higher, well, that's called a rolling order. Getting out of what we got now and just saying, I would like to enter a new position. All right. So options, what we're going to do first, let's profit take on this one. We already talked about the call. Right click on that, create closing order, and we're just going to buy it back. Okay. That's probably the easiest thing to do. Create closing order, buy it back. Now, when you buy it back, we're going to try to buy it back at the mid price. If you're the buyer, you're trying to buy it lower. Okay. Confirm and send. Now, a lot of times when people talk about rolling a position, they think, well, if you roll, that's not a new position. Yes, it is. Okay. We're going to send the order and then notice the commission there for the one contract. Send. Now, what we're going to do is the one that we had is the April expiration. We're going to come down here to the May expiration. And if we decided, hey, I want to be a little bit more aggressive, what does that even mean? Well, if we want to be a little bit more aggressive, we would be selling a strike price closer to the current stock price. If that was the case, the premium would be bigger. If that was also the case, the delta would be higher. Okay? So if the delta is higher, or if it's saying there's a greater chance of the stock being a penny below the strike by expiration. Statistically, as of right now, there's a 43% chance the stock will be 1 penny below the strike at expiration. Now, what we're going to do is we're going to right click on that, okay, sell, and now what we're going to do is vertical. Now, why are you doing vertical? Well, you know exactly where I'm going if you catch our Thursday's discussion. Sell vertical. Now, what are you doing? Well, we're selling the 120. We're being a little bit more aggressive, but we're buying a put below that. Which strike has a delta less than 10? Well, it's the 100. Is it fairly liquid, 20 cents or narrow? 15 cents. If we got somewhere in the middle, maybe be a nickel, 10 cents. So we're going to change that down to, let's say, the 110. Why? 100. Okay? And what that really does is we have an obligation to buy the shares at 120, but then we have a right to sell those shares at 100. So the risk is not down to 0. The risk is down to 100. That right is not indefinite out in time. It's to the May 15th expiration. Now, notice the credit there, $392. Why is it not $440-ish? It's because we're getting that or trying to, but then we're paying this approximately. And now what you see in this case is that credit 392. This is a new position. So our first trades we actually talked about here today was which ones? Number one, we got out of Devon. We got out of Halliburton. What was our number one entry? Answer we talked about for first example, that is Micron. That was the first example of stock trade. Second and third, we got out of Halliburton and Devon. The second bullish example here, a short wide put vertical, is on Target. Okay. Now notice the commission there because we have one contract, but it's one contract of the 120 and the 100, hence $1.30. Send. Now, if we go back just real quick, couple stocks that I want to kind of flash before us real quick. So when we look at Target, if someone's going long here, clearly they're actually thinking of this price that we're going to try to break higher. Do we know it's going to break higher? No. Could it fall back down and try to bounce off that 115? Yes. Could some investors try to add to that position? Don't even get me to answer that because we've talked about dollar cost averaging a lot. That's why we're talking about in more volatile markets, investors that have experience, they split up the capital, okay? Now, what I'm going to do is let me kind of show some things. We already talked about Amazon, mentioned that. Keep an eye on that going into earnings. Second stock actually there that got or poked its way back up above that horizontal, Apple. I think the one thing that we'd have to say that has been a little bit better, which is very critical, is financials. Now, financials, if they can reverse here, which, by the way, won't take a lot, stocks like Citi, okay, which already made a short-term high, stocks maybe like Wells Fargo, you already have like a kind of a little run to the upside, pull back, a little bounce. I know people are going to say, what about earnings? Okay, what about them? And if we take a look at this, I kind of just think some other things we want to keep an eye on is stocks like Google. This is your classic snapback rally. You know, if you start getting above and closing above the 296, it's like that breakdown never even happened, and they're playing that quick reversal back to the upside. Now, if anyone knows this more than anyone, it's Len. Len, I know you're out there. Don't act like you're not out here. But the biggest actually thing is when you're seeing this, this is your classic. This is those three examples where A, bears exit, the smart ones. Number two, the bulls enter. And number three is the bulls who already have the position might even add to the position. The second entry of people are new bulls. The third entry are people that already have the position that are trying to add to it. And that's why a lot of the times these type of setups, snap back rallies, they can be vicious because bears exit, current bulls add to the position, and new bulls try to enter. Don't forget that. Now, in closing here, couple things when we talked about airlines last week. We went up to the 68. That's what we were looking for last week. Keep an eye on that. Obviously, it's the crude. The one that has not moved a ton yet is UAL. And if you look at, let's say, Love, let's include that. That's still underperforming. So it's still a two-horse airline race. But I think the also ones we want to keep an eye on this week is CCL, Carnival, RCL, Royal Caribbean, NCLH, Norwegian Cruise Lines. If you can get this crude oil to the pressure get pushed down, you know, some of these actually inverse oil type trades, they look like they could be building some pressure to try to break out to the upside. Keep an eye on that. Also want to kind of say Marriott and Hilton. Okay. Now, Ben Watson will be teaching our next session. That is going to be coming up right at the top of the hour. I want to thank Rachel Dashel for answering those questions in chat, and thanks to all of you. Now, just real quick, as we get quick reminder, with what we discussed here today, it was done for informational purposes only. When we talk about examples, they were just that. It's one thing to talk about the market. It's no whole other thing to talk about entering the positions and managing those positions. So that's why you want to come each week. With that said, this has been the class on trading with technical indicators, really focusing on reversals. I'll be in throughout the week. And again, thanks to Rachel. Stay tuned for Ben Watson coming up next. Take care. Bye-bye.